everyone. My name is Phil Blancato, and I'm CEO and President of Ladder McDowell Asset Management, Chief Market Strategist for Osaic. Welcome to another weekly Market Impact. Here we go. Can you believe it's March? You know the old saying, March comes in like a lion and goes out like a lamb. It did snow here on Sunday morning, and it is about 30 outside. But by the end of this week, we're going to be well into the 60-degree range, and it's going to be raining, not snowing here for a change. Over the weekend, I watched a bunch of my neighbors, and I thought they were being kind of silly. Uh, Taking the snow, because we still have mounds of snow outside, and shoveling off the front of their house so they could get to their curb and park in front of their house. We still got houses with chairs in the front blocking parking spots that have been shoveled out. New York City's a lot better. New York City is warm normally, and finally, the little bit of warmth we've had has melted quite a bit of the snow. So we're getting back to normal in New York, one shovel at a time. It looks like for us, it's all coming to an end. Finally, all the rivers and lakes are now no longer frozen. And then most importantly, spring is coming. I do love winter. I did get to ski a couple days so far this year. I am going out west for a few days, so hopefully that'll be fun. I do love West Coast skiing. Luca's going to come with me. Very exciting. Don't tell anybody, but Marcella has a test today in biochem, and she is flipping out. She's taking it in 15 minutes. She's a very unhappy young lady. She's convinced she's going to do poorly on this. So somebody remind me to let you know how she did next week. My guess is she's going to freak out and still probably get a 90 something or a high 80s or something. She works way too hard, works far too hard at her grades. Now she wants to be a doctor, so she has to do well. I understand that. That's a real thing. But at the same time, I worry about her because she takes it so seriously. Oh my gosh. Anyway, Luca's gonna meet me out doing some skiing together. So hopefully out west starts to get some snow and no more snow on the East Coast. To give you a sign of spring, in about 2 weeks, mid-March, I will probably start to seed my tomatoes, the plants for 2026. My 2025 sauce was wonderful. It's a little thin, but the flavor is great. I had some over the weekend. It's very good. So start thinking about this year. And I haven't used up a lot of the sauce this year. I have plenty to go still. Now, granted, it's March, and the new batch won't be ready till September. So 6 months more of plenty of the really good stuff, but much more to come. Talking about spring, it's not even here. I did notice though this weekend, you know what happens? We're gonna roll the clocks forward. So the days will suddenly become much brighter. The sun will set somewhere probably close to 7 o'clock starting Saturday night. That's very exciting. Anyway, I hope you had a wonderful weekend and I hope you did something fun. I got a chance to go out to a birthday party on Friday night, which was kind of neat. We have the annual pig roast. In fact, if you see the picture behind me, I don't know how to zoom, but there's one on the left and then there's one on the right and one right in the middle. The one right in the middle, it's hard to see. That's my dad there in the middle of the picture and a bunch of my buddies behind it. Every year we go to the annual dinner at the Westfield Italian American Club. And the guys do a wonderful job. It's a big pork roast dinner, pig dinner. And it's just a good annual tradition where everyone brings their homemade wines, some store-bought wine, and we all get together, a bunch of guys, and just catch up. It's usually a couple of times a year, but there's one big annual event, and it was this past Saturday. And why I mentioned it, I got to sit with my Zio Mario, my Uncle Mario, who's just this neat guy in his late 80s, still a brilliant card player. We caught up on old times, and everyone missing my dad and folks that used to be there that are now gone. Some that got are still there, but it's a great tradition. So I got to do that on Saturday night, and then finally on Sunday, just got to get a good workout in. It's important getting the workout in. Anyway, hope your weekend was fun. Obviously, I paid very close attention to what's happening with the Iran United States scenario, U.S. Israel. And I don't know that I'm going to get into the politics of war. I think you're getting plenty of that being bombarded with it right now. But certainly I understand why there's concern about it. But let's be honest. This is not the first time we've had wars like this, kind of pop out of nowhere. We know that this has been an ongoing problem for many, many generations. When you think about the last 40 years of people have been dealing with this, whether it's presidents coming back and forth, or more importantly, who was going to be the latest one to try and calm down on Iran. It's interesting that when I grew up, I'm 58 today, I think the Middle East had much more, less of a it seems like there's one country left that is, I would say, to some degree, religious radicals, and I don't want to call them that, but certainly when I look at the number of civilians that are dying in protest, for example, if you look at 40 years ago to today, and you look at the Iranian currency, it's down 99%. They have been through decades of terrible economics there. They could be the third biggest oil producer in the world. They're not. They do produce oil every single day, but nowhere near what they could. They have used religion as a weapon against women and against anybody who disagrees with the current regime. So I guess I'm not defending the war. I don't know that that's my place, but I do think from an economic standpoint, it's obvious that the Iranian people have been suppressed for a long, long time. Not unlike Venezuela. Venezuela today is already closing in on nearly 3 million barrels a day from 900,000. Now, it was expected to ramp it up fairly quickly. Can you go from 3 million to 6 million or 9 million? That would be impressive. But certainly it's a turn for the better. Can Iran become that turn for the better? Well, I remember the Iran hostage crisis when I was a kid. Here we are 40 years later, and what's changed other than more brutality towards the Iranian people? So maybe it is time for this. Should we be the only country doing this? Should it have been done with Congress's approval? Should there be more of a thought process that protecting civilians and to what's going to happen after the current regime falls? Of course, I'm not touching that. What I would say is for markets and why markets are very optimistic. We started the day with the Dow down over 500 points. And as the time of this recording, it's now 1250 on the East Coast. The Dow is flat. The S&P 500's up basically flat. And the Nasdaq up 0.3 of 1%. Interestingly, small caps are up nearly 3/4 of 1%. And the bond market is pushing a bit higher. What is this all signaling? Signaling that the market isn't too concerned about this, signaling that this is a short-term event and that more than likely it'll be over quicker than we think. But here's some thoughts on it might come to mind. First of all, it's important to ignore the political banter around this. Let's leave. If you want, I'm worried about economics. Let's not let the politics get involved. We can talk about that separately, maybe over coffee or something. War is not a deflationary thing. War is inflationary. Why? Because stuff gets made. Whether it's to think of all the rockets that are going to have to be replaced and the fuel that needs to be distilled or created, the bullets if they're going to be using them, whatever, all the ammunitions and everything that goes into it. That's inflationary, not deflationary. That's stimulative. Not think of all the money that we sent to Ukraine today. We're not sending it in the form of dollars. We're sending it in the form of weapons. So, in that way, war is a stimulative. It's not one. I don't think this is Vietnam where this will go on for an extended period of time. And even Vietnam in that way was a bit of an inflationary spiral. This should be much more temporary. I mean, you never know, obviously. But in fact, I think wars in and of themselves are inflationary, but a short-term war shouldn't be terribly inflationary. But when you think about where we are today with our very large trade deficit, this will help the trade deficit a little bit by more of the total military equipment's made in the United States. And then more importantly, what does this do for global trade here? Does it make it better or worse? We know we're on the other side of this tariff announcement, so that might play into it. Where today there's not really tariff. Well, the initial round of tariffs are no longer in place, but now there's this new global tariff on a temporary basis. So we'll see what that means. The Middle East has been a place of turmoil for a long time, but ultimately the only real point from an economic standpoint is, you know, if it's not, I would argue that oil being up to $72 a barrel today is a concern. And why I make this a concern is that prior wars in the Middle East, think what happened with Israel and Iran not long ago, Israel, Palestine, other conflicts that have happened, have all been not inflationary in recent years. We seem to be in this period of smaller wars, Venezuela being an example. But so far, they haven't been inflationary. And why that's important is because when you think about where we are today, how does the Fed cut interest rates if oil skyrockets to $72 a barrel and holds at $72 a barrel? And it probably would hold higher if Iran is off the market from oil production. Now, could you get a new regime in there that's going to keep oil running and they still produce their, 4 or 5 million barrels a day? Well, I guess that's possible, but probably unlikely. So the idea that oil is going to be a bit higher for longer, which is in and of itself inflationary is a real thing. So my first real thought on the war is that commodity reflation is maybe upon us. And I think it's going to handcuff the Fed from the ability to cut interest rates. And the bond market's reflecting that today. The 10-year US Treasury is up to about 10 basis points, 0.10. It was trading below 4%. Now it popped back above 4%. And it's probably because we're looking at a scenario where we're probably going to have a bit more inflation because of this. At a time when we're seeing inflation in other areas already. We have some information on PPI, Producer Price Index, which came out last week, and that number came in a bit hotter than expected. And the reason why I mention it is PPI is what it costs to make stuff. So just quickly going over the PPI data, what we saw last week was core PPI, when you strip out some of the more volatile areas like energy and food, was up 3.6%. That's a lot higher than the rate of inflation. That's a concern. And even headline PPI was up 2.9%. We expected that to be a bit softer. So what it meant was that we saw some gains in the core components of inflation and in wages, but mostly in services, by the way. The service sector continues to be higher. Actual goods, in fairness, was a bit lower. So I'm not terribly stressed about it because if you really break down the numbers, it suggests that services, something we continue to demand more of, are higher, which I don't know if that's a terrible thing because I mean wages are going to stay higher for the service sector, which is the biggest labor sector of the United States today, and it means the consumer stays stronger for longer, but it still was higher. So, and in the end, maybe the goods piece is good news, but the wage piece, you don't want it to go so high that it creates inflation again. So my point is, we're seeing other areas be a bit more expensive as of late. So that would be a little bit of a concern. And then if oil happens to hold on at this high level, well, that's a bigger concern. So gold today, acting as sort of the spare tire in portfolios today, this kind of safe haven, is up again, $5,500 an ounce. So we have a scenario today where, there is a bit of concern in the markets. It probably makes sense to be in dividend paying stocks so you get paid to wait around. And even in fixed income, I think you want to have this idea that, um, have a quality fixed income portfolio that's not going to create any default scenario. And the reason why you want to do that is simply because you have this opportunity to be careful about inflation going higher. If oil stays higher for longer, it's going to happen. So you don't want to have bonds too long in duration, but bonds just about the, kind of that 5, 6 year period. Why? Because interest rates may push higher if inflation goes higher. I'm talking a lot of mumbo jumbo today. My biggest worry in all this is what if the Fed can't cut rates and what if the Fed has to hike rates? Could you imagine that scenario? If they have to hike rates because of higher energy prices, if they have to hike rates because of higher goods prices, if they have to hike rates because service prices stay higher, well, then we got a problem because the stock market would not be happy with that. And the bond market would be very unhappy with that. And in that scenario, that would be a bad period of time. What's it look like right now? There's little hints of it that goods prices are staying a bit higher for longer. And certainly, higher oil would mean higher commodities, mean higher gasoline. People don't like spending when they pay more at the pump. It's just that simple. And with gas up at today, depending on where you live, around, I paid what did I pay this weekend? I paid 281 a gallon, up from the 255 I paid. What if it goes back to $4 a gallon because it's a huge move higher? That hurts, on a car with a 20-gallon tank, that's an extra $25. So that's a real thing. That's something we have to keep a close eye on to see if this actually happens. What we did see today, I think, was a good sign, is a move back into the dollar. The dollar strengthens against just about all major currencies today. Why? Because the dollar is still a safe haven asset. It's where people go when they're looking for a place to park cash because of the time of war. Is this a real war? It doesn't seem like China and Russia are signaling in any way that they're going to come to Iran's rescue, and certainly not North Korea, which would make me concerned about a bigger, greater global conflict. If anything, some of the other Middle Eastern countries like the UAE and Saudi Arabia are upset because they've gotten bombed in a couple ways, and for that reason, they're joining the fight. It looks like the servicemen from the United States that were wounded were probably because of friendly fire of other nations getting involved, ruining a few aircraft and maybe some of the bombs. But sadly, some of them, there are now 4 American soldiers who have passed away. That's the tragedy of all this. But ultimately, what it means for economics is that be careful of higher inflation. That's the worry. All right, this week, the S&P sold off again last week. Volatility about this AI trade. Will AI be this massive disruptor? I read a great piece over the weekend that says so far it just hasn't been. I know 46,000 jobs last year were lost to AI. Now I know it's early, and we could probably have a long way to go to understand this. But since ChatGPT's been launched, jobs are up significantly, not down, and will ultimately be this massive disruptor that everyone plans it to be. It's no way to know. And usually, one industry fades away, in this case, software programmers, and new industries replace it. In this way, with Anthropic and other AI tools replacing the human coding, doing coding. There's usually some new industry developed around it, whether it's energy or power or data centers or management of data. All these things that are going to be needed in this new modern era. So yeah, some jobs may get disrupted. I think that's very fair to expect. Will it be all jobs? I think that's very unrealistic at this point. We just don't have an idea. What are we all going to do? Sit home and get paid by the federal government? Well, I don't know if that's going to happen. We're just going to live off corporate wages. That seems kind of goofy to me. So let's not get too far ahead of ourselves. But the market's still worried about it. And the market sold off last week. NVIDIA put out really strong revenue numbers, over $60 billion in revenue, and the stock was down 10%. So when you look at the market for last week, the stock market was down 0.42. On a year-to-date basis, it's only up 0.68. The Dow is beating the S&P 500 by almost, well, what is it? Almost 4 times, just a little less, 3.5 times. The small cap stocks are up 6%, while the S&P 500 is only up 0.68. International stocks doing really well, up 10%, and emerging market stocks, which have a lot of volatility, but with the announcement of tariffs being kind of out of the way temporarily, or at least some version of them, up over 14%. Are you ready for this? The bond market is up 1.75% this year, beating the S&P by 300% higher. I mean, that's incredible. A diversified and balanced portfolio is doing really well. I think that's your takeaway here, that a diversified account is really the success story so far this year. And I think it's hard to discount that at all. And we have to be focused on that. That I think it does become very relevant, that a balanced account is giving you exposure to international stocks, smaller stocks, and bonds, and not just being in large cap growth, not just being dedicated to one area. So I do think it's fascinating that we have this scenario of, what's to come in AI and how is it going to really have this impact on us? I think we sometimes forget about. There are a lot of other businesses out there and a lot of other ways to make stuff and make money, and it's not just in AI. All right, couple of things to talk about. We did see actually a relative tick up in consumer confidence, depending on which party you're in. The State of the Union address really did give a kind of a renowned sense of confidence, which I think is a good thing for some people. A lot didn't believe in it. But rising confidence generally means that folks are feeling a little bit more optimistic about the jobs, about their income, about their safety, about their security, and most importantly, affordability. So a little bit of better news. I don't care a lot about confidence. I think it's something to be aware of, but not be completely wrapped up in. I don't know if you got to get too goofy about that kind of stuff. This week we're going to get unemployment numbers or employment numbers, depending how you look at it. We'll get ADP for private sector. We'll get retail sales this week. We'll also get employment data. And the big one, which we just got this morning, is manufacturing data. And now this one matters to me. So let me jump over to that for a second. Manufacturing came in at 52.4. Anything above 50 suggests expansion. And why that's so terribly important, that, is there really an American renaissance happening in the manufacturing sector? We saw the numbers for the month of January come in very positive. And if you look at manufacturing, it's been in contraction almost every single month for the last 5 years. So what we're seeing is some maybe the beginnings of expansion in manufacturing. And maybe it's a head fake because it's early in the year, and I want to see continued months of this. But it certainly does say to me that we have this scenario where new orders, the demand for stuff, is expanding, not contracting. Well, everybody, if that's what's happening in our manufacturing sector, that really is wonderful news. And it's hard to just gloss over it because you might be getting a renaissance in American manufacturing and might have some impact on the trade deficit, but more importantly, for jobs and wages. And if this is the beginning of a manufacturing rebound, we've talked about things that have happened. The AstraZeneca plant being built in Maryland, the Eli Lilly plant being Pennsylvania, the lithium mines being coming back online, the aluminum smelters coming back online. All these things suggest that maybe, just maybe, there's a greater good here, that there might be something coming out of this, which I think could be quite interesting. So paying attention to that manufacturing number, I think, is very, very important. And whether or not we get renowned success over this, and then we'll see. But aside from $10 a barrel oil today, which very much hurt manufacturing, by the way, assuming that is somewhat temporary, it'll be fascinating to watch where this goes from here. Okay, a couple other things to think about as we go through the upcoming days here. This unemployment number is going to matter a lot, and whether or not there is this weakness in the employment market. Will something be breaking down there? And I think we got to be careful to make sure that we don't get too wrapped up in it. But I do think that, man, you don't want to let one number skew you. But there is this scenario where you have to be very smart about uh, if the labor market weakens and we get higher inflation because of oil. That's a really tough time. That means the market would be bad, and you start talking about recession. Separately, if we do get a strong labor number this week and we start to see this rebound from 2025, which if you take out healthcare from 2025, last year was a really tough year for new jobs. And then even more so, the net number of jobs added last year is less than 200,000. You added 700,000 for the year, but about over 550, 600,000 were in healthcare. So that's my point about healthcare being out of it. So this, keeping a close eye on the labor market is going to be very, very important. And along with that, we're going to get things like JOLTS, the number of jobs that are open. We'll get ISM services. Now we got the manufacturing number, but on Wednesday we get services. Why that matters to me? As the service sector goes, so does the U.S. economy. So we get the number of jobs open. We get the labor number overall. We get the service number. This is a big week for data, everybody. So I just want to draw your attention that there's plenty going on under the surface besides the war. And we have to call it what it is. We are at war with another country right now. Hopefully it is short-lived and not going to be terribly difficult, but let's hope that it's more importantly not a significant loss of life. We are in the midst of it right now. I did read two other things this weekend which I thought were fascinating. That the chip, the average silicone chip today, that Moore's law, which is basically the doubling of your technology every 12 to 18 months, and just physics and how much a chip can get you are beginning to become an issue. But by 2040, the size of the average chip will be smaller than it is today, maybe 10 times smaller, and be able to do 10 times more computing. You can't even wrap your head around some of this stuff that in 15 years we'll hit the ceiling. Chips won't be able to get any more smaller because of the physics, but also will be at maximum capacity speed, at least for that style of chip. So these tiny little things that you can barely see are going to have a tremendous lot of power, but it's probably 15 years away from doing it. And the other thing I saw this weekend, that as I get older and I'm trying to be good about my health, I'm very good about my whole life. I've lived on the Mediterranean diet. I eat a lot of pasta, I eat a lot of sauce, as you know, I eat a lot of salad, I eat a lot of high protein meals, a lot of cheese and mozzarella, wine. I'd like a glass of wine. So I've kind of grown up in and around the Mediterranean diet. And I've done pretty good in the last few years of less and less soda and less potato chips, even though I still like them, and nothing like a good New Jersey submarine sandwich with some potato chips. You can't pass that up. A French fry once in a while, but less so. My point is, I read something on the weekend about artificial dyes. There's been a lot about these artificial dye world that even Target, a brand that we all know and love, well, all know, you may love it or not, is ditching their artificial dyes in many of their cereals. And why I think that's cool, look, you can like RFK, not like RFK. I got to give him credit for the shape he's in for an older guy in his 70s, and he's been shredded. He's definitely kind of a goofy cat, no doubt about it. But some of these things I think are becoming interesting. If we can get artificial dyes out of our diet, doesn't it mean the long-term health of the average American is better? I mean, I would think so. So Now, you want to debate vaccines? Well, that's above my pay grade. That's probably too hard for me to talk about without sounding political. So, I'm still fighting this damn cold. It's 5 weeks tomorrow. And granted, it's mostly gone. Still a little cough, still a little congested. This has been the worst cold I've had in a long time. So forgive me if I sound terrible. But anyway, I just thought that artificial dye comment was pretty cool. It does nothing to do with economics, just things I pick up that I think are interesting to talk to you all about. I'll wrap up with my shout out of the week. And this week's an easy one. It's the U.S. military. Whether you agree with the war or not, and certainly the 4 service members who have lost their lives already, for the people out there who are willing to commit and do what they're asked to do, take orders and either fire the weapon or fly the plane or protect us in any way, whether it's with cybersecurity and everything down to launching a missile, you got to give your hats off to the American military. They were asked to meet the call again. They just met it in Venezuela a few weeks ago. And I'm not agreeing or disagreeing with any of these things. I think the Venezuelan situation, I was thrilled to see, millions of people around the globe celebrating Maduro's capture. Let's hope it leads to a better Venezuela. In the same way, when you look at today's the front page of today's Wall Street Journal, parades or gatherings around the world celebrating what's happening in Iran and the fall of the Ayatollah. I would assume that the greater good here matters to many people, and that what you're seeing is this desire to see this war come to an end quickly, but also get rid of some really bad people. At least I hope that's the optimist in me, thinking that the people's will matters most. But my shout out definitely goes to the American military, and they're meeting the call once again. I hope you have a wonderful week, everybody. Lots of data this week. I'm going to have lots of guests on. I know you like the guests. I've got some whole bunch of super cool guests lined up. We'll be getting to those one at a time. Have a great week. Enjoy yourself. Enjoy the warm up. The snow's going to melt finally. Before you know it, in my area, the cherry blossoms will bloom. And there's nothing like cherry. From D.C. to New Jersey, when those cherry blossoms come in, they're something to behold. Take care, everybody. Have a great week. Talk to you all soon.